You're watching Newsfeed AM. Let's give you the markets update now. The Rand on the back foot in early trade after the U.S. Federal Reserve projected higher interest rates for a longer period. The Fed chairperson, Jerome Powell, saying that on Wednesday the central bank will deliver more rate hikes next year, even as the economy slips towards a possible recession. Lesedi Mabuza is with Sentio Capital, an equity analyst there, joining us now for a quick update on the performance of the Johannesburg Stock Exchange. Lesedi, good morning to you. Your quick overview of how the markets are faring in early trade.
Good morning. So our markets here in Johannesburg this morning, you are seeing the JO shares trading slightly weaker, down about 0.5%. And this is not a surprise as we did expect it, especially seeing as what happened globally in the markets from last night. And the general negativity that we saw in the US, where you saw the S&P 500 trading lower, was mainly due to the Fed Chair Jerome Powell indicating a more hawkish stance and reiterating that more interest rate hikes are to come in 2023 and that they are firm on targeting a 2% inflation for the US. And this negativity also spilled over into the Asian markets, where you saw Hong Kong leading the declines down about 1.4%. So in our markets today, don't expect it to trade much higher due to the recession fears looming over the markets today.
Yeah, let's focus the attention on the Rand staging a rebound yesterday. Should we expect much of the same today?
I don't think so. I mean, even looking at trading this morning, it has weakened slightly. And I think yesterday's upbeat was before the interest rate hike by the U.S. Federal Reserve. And I think the market was kind of leading towards the expected 50 basis point interest rate hike, and that the Federal Reserve would come out with a more dovish talk, indicating that maybe they might start tapering off or reducing the increments of interest rate hikes. But as I said, they did come out and say there's no stopping, there's no pivot, and more interest rates will be coming next year.
Yeah. Let's talk company news briefly. Let's start with Transnet, the state-owned port and rail operator. It is facing 2 bond repayments that are coming due in the next 2 months or so. And these are worth a combined 1.088 billion rand. Talk us through those developments.
So with that total amount, with that value that you specify, the total amount relates to about 556 million in bonds that are maturing in February 2023, and also another 532 million in debt instruments that is also due to mature in February 2023. Now, with Transnet, they shouldn't have any trouble refinancing or rolling over the debt. But the issue is that they will be paying off that debt at higher repayment costs. As we've seen this year, the Reserve Bank has increased interest rates by a large amount. Therefore, higher than what they are paying at the moment, unfortunately.
Let's conclude the conversation with Accelerate Property Fund, which has published its interim results for the 6 months, which ended on the 30th of September 2022. How are their numbers looking?
So Accelerate, just to specify or just to mention one of the properties that I'm sure people might know. So in their portfolio, one of the properties that they do have is Fourways Mall, and they are also owners of Cedar Square in Fourways. And in their revenue, interim results, you did see revenue increasing from 453 million to about 448 million. And you also saw them generating a basic gain of 17 Rand 11 cents from a loss of about 3 Rand 74 cents. Now, you also did see vacancies higher, increasing from 17.3% last year to about 19.9% last year, indicating that you are seeing some people coming out and that they aren't able to get those rental renewals or get that full capacity in their malls. And although you did see revenue from continued operations increase, You did see distributable income coming lower, and this is due to pressures from higher interest rates, the cost of providing power during load shedding, as we had a lot of load shedding this year, and also you've seen higher municipal and utility costs also impacting that distributable income as well.
Yeah. Lesedi Mabuza, let me thank you very much for your time. She is equity analyst at Sentio Capital. Let's move on to the